This has been a highly requested topic, and it's about time I did an in-depth video. So I'm going to start off by explaining kind of the price action, the analysis of what happens, the psychological reason behind these zones actually having validity, and understanding why these zones are created and how they're created allows you to better understand how to play them, and then you know what's actually driving these areas. So first, I want to explain to you kind of the idea behind a supply and demand zone. So a supply zone is essentially, it's in the name, it's an area of very high supply, right? So an excess of supply. So when we say an excess of supply, we just mean a lot of selling pressure, a lot of open sell orders that need to be filled, which creates downward pressure. So usually what happens is you'll have an increase in price, we have a kind of bullish move, and then a sharp reversal to the downside. These reversals, if you're not in a penny stock, if you're an ETF or in a large cap, that's not caused by your everyday investor, that's caused by large institutions who are controlling the market. So there's a lot of a sharp reversal to the downside. You're still going to have a lot of open sell orders here. So when you get back to this area, those sell orders are going to fill and push the price back down. The inverse is true for a demand zone. We have a sharp reversal to the upside. We still have a lot of buys that need to be filled here. So once we retest that areas, those buys will fill and people will hop in as it's a strong support, and we will push back to the upside. So the way that you can draw these zones, they don't just have to be on the larger time frames. You can actually have intraday supply and demand zones, which I'll show you how to draw right now. So what I like to do is, if we go to our drawing tool, we'll go to a rectangle for a zone. So you can see here we had a sharp move to the upside, and then we reversed to the downside, creating a supply zone up here. So what you can do, what I like to do, is I take the very top wick, I'll start drawing there, and then I'll draw it to the next candle body, and then I'll create that zone. And I'll do the same thing. Here we have a sharp move to the downside, and then a large reversal to the upside, leaving this zone down here as well. So these zones, essentially, you'll see how well they're respected. This is a demand zone, so we have a lot of buying pressure. This is a supply zone, so we have a lot of selling pressure. So you can see we rallied up, we created this zone, fell back to the downside, retraced, and then fell again to the downside, but now we're met with this huge demand zone. So this demand zone, with having such a large wick, is going to have a good amount of pressure here, right? So these are a lot of buys that need to be filled down here in this wick. So we get those buys filled, and then we go back to the upside, and then we meet the supply zone again. Like I said prior, these supply zones are going to have heavy selling pressure, and so we made a move to the downside. We could not break through the supply zone, and so we reversed the downside. And then here again, you can see that once we closed inside the demand zone on pressure, we consolidated a little bit, finding support on the bottom, and then we were able to close above this demand zone. That's usually a bullish sign. We did make a slight move after, but ultimately ended up closing within that day for closing within that zone for the day. So that's kind of on an intraday level. What you can do is, if you go back and just kind of test this out, it typically will fare better on a day it's not so volatile. So let's try it with today, right, or this day right here. So you can see that we have a large move to the downside, and we have reversal to the upside, and so we create a supply zone. So what we can do is we can draw it to the next candle like that. Okay, and then we have a large buy pressure here, and then a huge reversal to the downside. So again, we can draw our zone like this. So here you can see that we have this supply zone, we reject, we go up, we don't necessarily get to it, and then we continue down. So here we do end up falling down to this zone right here. We do have one candle close below it, and then we shoot back up and close above this zone, and then have a nice bullish move outside that zone. Let's try a different day. This would be a great day for it. So this is the 6th. So what you can see here is we have this upward trend, and then we have a sharp reversal to the downside. So we can draw this zone like that. So normally I do the top of the candle wick to the candle body, but there's so little in between there that we can actually extend this move a little bit more to encompass the bottom of this candle. And so we have a sharp move to the downside, and then a move to the upside, and this right here is where we would draw our demand zone. So just looking at the price action here, we have this dump, we reverse up here, we try to break through this demand zone, we're able to slightly close above it, but then we're shoved all the way back down. We try a second time to break through the supply zone, we fail. Third time, we fail. Fourth time, we fail. And you can see every time that we're trying and we fail, we get a push back down. So price never actually ended up going into this demand zone right here, but if it would, you could expect kind of like a sharp reversal like that. So that's another use of it intraday. You can try it again here. So you have an extended move to the downside, sharp reversal to the upside. So we go ahead and draw our zone. And then we have this large move to the downside, or to the upside, sharp reversal, go all the way up. So we did have a reversal here. You could draw a zone like this, but ultimately the real sharp reversal to the downside was up here, so you can draw that supply zone there. But regardless, you can see that even if you drew this zone, and you see this move to the downside, we did bounce off of this zone on this wick. Once we closed below the zone, we tried to retest it, failed, and then dumped to the next zone. We found some buying pressure here, and then we reversed to the upside. So that's how you can use them intraday. I typically would just mark highs and lows. I don't necessarily draw zones intraday, but you definitely can. And now I'll show you how I use them on the larger time frames. So let's get rid of all these zones and start from fresh. Okay, that should be all of them. Not quite. Okay. So the way that you can use zones here is, what you can do is, if you have some days prior, so let's see, we'll just take Friday. So what we can do is we can go to the 15-minute chart if we're on the 5-minute chart, and then we can start drawing our zones. So I found that zones work better for, like, if you're using a previous day zone, it works better if you go up on a higher time frame. So if I'm trading on the 5-minute time frame, I will draw my zones on the 15-minute time frame. So if you just look at, this is Friday, so I would go to the previous day, which is Thursday. I would find the low of day. You can see here we have a big wick to the bottom, and then we close up here to form this demand zone. So I would just start from the bottom of that wick and then continue up to the candle body. And then you could draw a zone up here, but you can see that there's a huge gap in price. We likely would not end up at this level. So we're going to try to find some zones that would kind of encompass plus or minus 1% on that day. So we have this zone. This is good. We could look for something that could potentially be a high of day zone for that day. So you can see if we go to Tuesday, Tuesday's low of day was a huge wick, 2 wicks, and then a huge push to the upside. So it's a very clear low of day zone that could fare us pretty well. So we go to the bottom of the candle wick, draw it to that top of the candle body, and there we go. And so you can already see that we're starting to get zones here. Now if you wanted to draw a zone to the downside, you might have to go a little bit further back. So the downside for that day, if we broke below like 404, so like the 400 to 404 region, you could use this day right here. So we had a huge wick to the downside here, so we could do wick to candle body there, and then you have several zones. So look at that. Do you see how these zones are already being respected? You can see. But if we go down on the 5-minute chart, we'll get a better look here. So let's go ahead and expand this. So just using those zones alone, you can see here that we tried multiple times to break out of this zone. At the beginning of the day, we found support on the bottom of that zone. We closed below and then shot back up. And then once we closed above this zone, this gap between the two zones was a nice area to fill. So we tried to get into the other zone. We had this nice push up, but we had multiple rejections. Got pushed back down. Found buying pressure in this demand zone. Went back up. You know, we kind of were respecting these zones pretty well. We had a second attempt to break through this zone. We could not. Again, got pushed to the downside. Found some buying pressure here. Pushed to the upside. Rejected this zone. Back to the downside. And then found buying pressure here. Back into this zone. So you can see how they're pretty well respected. Honestly, these zones can be incredibly useful at the very bare minimum, just to kind of see where you expect price to reverse, and then I like to use those zones in confluence with many other indicators to devise a strategy and to take scalps. So hopefully that's useful. That should explain it a little bit more in depth, so hope that's good. Thanks, guys.